Hello everyone. We're in the middle of the summer and now entering to the second half of the year, and we can now see more clearly the direction the economy for the remainder of 2021 is going. I must say, the current trends are promising, and we believe that the fears of the economic crash are behind us, provided there is no catastrophic event impacting us with the new COVID strands. According to Ethan Harris, Bank of America's head of global economic research, the economic growth for the second quarter would be around 10%. 10%, guys, that's a lot. Jamie Dimon, the CEO of JP Morgan, was also very optimistic about the economy and suggested that there's going to be a booming economy could extend well into 2023. Of course, that's all good news. So I'd like to mention some very clear trends that we're seeing in the economy and how they affect the real estate multifamily market. First trend, rents are rising fast, reported by several outlets like the Wall Street Journal and the Financial Times recently. Apartment rents are increasing, the rental market is exceeding expectations in many metropolitan cities, such as Atlanta, Georgia, Austin, Texas, and other major cities in Florida. We had this trend on our radar. We have mentioned in earlier blogs, but most of the recent economic data clearly is showing it. One reason is that it has to do with young workers heading back to big cities to work. What they're finding is that expensive housing market that keeps them from buying their home. Another important reason for this trend is, of course, the expensive housing market that we have seen in the past few months. Fueled by low inventory, low interest rates, the price boom hasn't been like this in decades. Now, this takes me to the second trend that we're seeing. Low interest rates. Low interest rates are nothing new. The Federal Reserve has kept low interest rates now for several years, but clearly it will remain unchanged for the remainder of the year. Mortgage rates will remain near historic lows, dropping recently to their lowest levels since the last winter. The benchmark of 30-year fixed rates mortgage hovered at 3% near the end of July, and the 15-year fixed rates were around 2.3%. Industry experts predict few major fluctuations in the mortgage interest rates. Between today and the end of the year, Fannie Mae foresees that the 30-year fixed rate mortgage averages 3% by late 2021, close to Freddie Mac's prediction of 3.1%. So the Mortgage Bankers Association foresees a 3.4% average rate across the year. Low interest rates fuel the overall economy. Multifamily is no different. Cheap debt allows investors to put more money into their new projects, which leads to more trends and more transactions happening. So multifamily acquisitions is pretty clear now that the multifamily sector will keep on growing for the rest of 2021. According to the recent report by CBRE, the U.S. multifamily investment will reach $148 billion in 2022. While that's lower than 2019's record level of $191 billion, it's 33% higher than 2020 estimates of $111 billion. Believe me, when I say that we are in the best moment in recent history to invest in multifamily properties, we are in that moment. The economy is getting stronger and stronger. Many people cannot afford to buy and will be renting for years and years to come. Interest rates are near historical lows, and there are many distressed properties all over the country that are selling at a discount. Yes, for those that think that there's no deals out there, trust me, there is. If you want to learn more about multifamily syndication or be able to jump on the next deal with me, please read my blogs, watch my videos on YouTube and on my social media platforms, or better yet, just reach me at Abiel@abielballesteros.com. See you on the next one.